Hello guys, today we try just to see something very important called discipline. Maybe you have heard a lot, trading discipline, you should be disciplined, you should be have discipline, but a lot of people they say, oh okay, what's this discipline that they talk about? Okay, we buy a stock, we sell a stock, what's this discipline? Okay, so if I tell you that the difference between a beginner and a professional trader is only discipline. Now, what is this discipline? Trading discipline is to have rules that you have made, or you have got a training and you have these rules, and you apply them for each trade. This is the difference. Now, if you buy a stock, and I will ask you the question, why did you buy this stock? If he says just because someone tells me, or because it goes up, or because of the news, or because of a guru online said to me, buy this stock, this here you are not disciplined. You have no discipline at all. Why? Because you don't know, you have no rule to search for stocks. You know, all trading is about rules. And these rules, step-by-step rules, makes you an excellent trader. It doesn't mean that you don't lose money in some trades. No, this is probability of losing. It's always there. But the only thing is that when you lose, you don't lose like beginners. You lose only the thing that you have prescribed, that you have a rule about. Okay? A rule. Now, let's say I will give you two rules right now, just an example to show you what does it mean. Now, rule number 1, when you buy a stock and you are right, hold it for more. Never use what we call price target. Oh, you say to me, oh okay, I bought this stock at $20. Now it's 22. Oh man, I got $200 and it is a big profit for me. So let's sell the stock and find another one. Is this a rule? Just you buy a stock, you sell it? Is this a rule? No. Here you are wrong. A stock that goes from 20 to 22 might go to 30 to 40 after few weeks. So what is the thing that makes you sell when you are right? When you are right, it means that the trend is your friend. Okay? Never sell a stock except when the trend is weak. We have some techniques to do that, to know if the trend is weak or not. Okay? So never just sell the stock because you want to exit. Wanting to exit a stock is not a rule. This is psychological. You are scared because you say, okay, the stock goes from $20 to 22. What if the stock goes down to 20 and they lose my profit? Is this a rule? This is not a rule. This is what we call a weakness in psychology. Weakness. You are weak. You don't see the trend. You are looking for little profits. So the rule is, when you are right, hold for more. At the exception where the trend is weak. So there are techniques you do, and then you can know where to exit. Okay? Second rule. You buy a stock, you don't put a stop loss. So here you have no rule of protecting your money. You should have a rule to protect your money, which is a regular stop loss in every trade that you do. Okay? The market doesn't wait for you until you spend. I will give you an example. One time, I was holding Twitter. This is like 1 year or 2 years ago. At 2 o'clock, okay, I always put stop loss. This stop loss was, I think the stock was 50. I think it was 54 or something like that. 54. No, it was like, I think 52. My stop loss was $2 less. It means $50. The stop loss is there. At 2 o'clock, everything is fine. The stock was going up like $1 or $2. It was so good. There is no problem. Now, after like 4 o'clock, I go to my account, check for Twitter. I don't find it. I say, what? I just see it. At 2 o'clock, it was so good. What did happen? I find that some news comes. It's not earning news. It is not earning news. It is something, some other kind of news comes to Twitter. Twitter goes for, I think from 52, it goes to 38. $14 going down in 1 hour or 2 hours before the close. So if you don't, I was lucky, and I am always lucky to use a stop loss because it doesn't matter for me what the stock is going to do. For me, I protect my money. I don't care about the market. What does it do? Now, those people, all the people in the market who have not used a stop loss have lost $14 in 1 hour or 2. You see the game? So you should have a discipline, rule to protect your money. So all your strategies, all your techniques are rules that you should apply. And then when you break a rule, you should know that you break a rule. And you, as a trader, if you put your own rules, you should never break them. When you break your rules, you will do mistakes. Okay? And when you do mistakes, how do you pay for mistakes? By your money. You lose a lot of money. And I showed you this difference between I lost $200 for each 100 shares I bought. Okay? It's okay. This is my stop loss. But other people, they have lost $1,400 in this 1 hour. $1,400 if you bought 100 shares, because the stock goes from 52 to 38. Don't tell me it will not happen, or this stock is good, it has never happened. You should not hope when you are in the stock market. Stock market is about surprises. Okay? As for example, when you buy a stock at $20, you sold it for 22. After, let's say you sold it at $22, you have $200 for 100 shares. Let's say you buy 500 shares, you get $1,000. You think that this $1,000 is a big money. But in real, the stock from 20, it doesn't go just to 22. It goes to 30, to 40, to 50. So how many thousands of dollars have you left on the table for other traders to take? You are right. But because of you have no rules, that's why you leave money on the table each time you trade. That's why for me, I am here to correct your mistakes that you are doing. If you correct your mistakes, you ameliorate your performance, and then you can make more money, and you lose just little money each time for each day. Okay? So thank you very much, and see you next video.